let's talk about the Strait of Hormuz, because that really feels like the linchpin here when you're talking about the outlook for Brent. So 10 boats through the strait, that's not nothing, but I have to imagine that's not enough.
It's not nothing. It's not nearly enough. And it's may not even be the number that Donald Trump mentioned, because the tanker trackers have not found that number of tankers going through any of the last few recent days.
And it's interesting. We were talking about a Dallas Fed quarterly energy survey yesterday, talking to some of the producers. And the sentiment was that until we see the strait opened and that you can actually see supply pass through it in a safe manner, that this disruption is far from over. So I know it's hard, but I mean, if you game plan out the next month, the next 3 months, and if this strait does virtually remain closed, what does that mean for global energy markets?
So it's easy to game out, because we know that oil is not going to be flowing through the strait, and it cannot be replaced to the degree it used to be there. Now, it may be that there's incremental supply, but at the moment, the world is losing a good 10 million, 11 million barrels a day. Others, parts of the system of stuff coming out can come out. It's not just crude oil, by the way. More critically, it's petroleum products, including jet fuel, including diesel, less so gasoline, including products that are used for petrochemical manufacture. Fertilizers are critical. And then there's other things like aluminum that really come out of the Gulf as well.
Well, when you think about the knock-on effects, we heard from a number of airline CEOs basically saying if oil and jet fuel stay where they are, we have to hike prices by 20%, just thinking through the knock-on effects. When you look at the dynamics that we have with Brent back towards $110 a barrel, is there a breaking point? Is it duration above $100? Is it getting back, dare I say, towards $150 that potentially causes things to break?
Well, I don't know what's going to cause things to break, but if you think about the lost amount of supply, add them all up, that's basically $10 million barrels a day, 300 million barrels a month. And there's no replacement for that 300 million. You need finally to have demand respond. So you need to kill off demand. And that requires, every month you think of this, a higher price, because after every month you have to figure out how much oil can surge back in the market, rebuild the inventories that have been already brought down and have been lost. So every month that is a longer month of supply disrupted is another month or 2 or 3, depending on how long it lasts, of incremental high prices. And we're getting to the point where you get through June, and that'll be significantly higher prices through the end of the year.
Well, it just reminds me back to about a year ago when Liberation Day happened, and okay, well, at least you, as the President Trump, could put that back in a box to an extent. You can't really undo the damage that we've been seeing, and can't undo, to your point, the supply that we've lost out on. Just thinking through the next 24 to 36 hours, is there something you're keeping an eye on, whether it's positioning from DC or Iran or something else to kind of calm markets?
So the two critical areas are Tehran and Washington. So you've got to try to figure out as best you can, using the people you know who are involved in things, or trying to figure it out on your own, what they're positioning them for. And Trump really did open up finally to say, I'd like to negotiate. The Iranians, we have to remind ourselves, were thinking that they were in the middle of a negotiation when Trump started the battle with Israel. So there's mistrust and distrust on both sides. That's not the only things to worry about. There are other things to worry about. We have Iraq, for example. We have the Iranians with a significant influence on Iraq. We have Iranian militants and Shia militants in Basra. This is a country that they're in that had a war with Iran that ended sinking some Kuwaiti vessels. It's a country that invaded Kuwait, took it over, and is more than a little bit irritated with Kuwait. And there's a Sunni-Shia relationship between the two of them. They could invade Kuwait. There could be another battlefield. So there are other things you have to look at, but the basic issue is Washington and Tehran.
Well, let's talk a little bit more about Washington, because we know that the Trump administration is very concerned with the price of oil. And a big reason why is because it feeds through into gas prices. And that obviously is a hot button issue as we get closer to those midterm elections. But Walk us through, I mean, how exactly direct of a link that is. If we stay around these levels, $110 per barrel when it comes to Brent, I mean, how does that feed through into the prices paid at the pump?
Sure. So I'll try to make it simple for explanation purposes, but you need to have refineries that are capable of refining the crude that's available. We have lost a significant chunk of crude in general, and there's basically 10 million barrels a day that cannot be replaced. So we won't have refined product, even if there's crude oil in inventory. The inventories of product around the world have been less sufficient when it comes to products than when it comes to crude oil, but we need the refined product. Europe, as an entity, has seen its crude production go down, but more critically, its refinery output go down, and their inventories of crude are higher than their inventories of product. So to go back to the point you were making a minute ago, when you have crude prices growing by 30%, some product prices are growing by 60%. And that's more or less the relationship on the critical products, including diesel, jet, and to a slightly lesser extent, gasoline. But we've had gasoline already at $6 a gallon in California, already hitting $5 over the rest of the country. 4 is the average that has been here, but we've been thinking about 3 being an average just 4 or 5 weeks ago.
I was getting used to that.
It will kill off demand eventually.